down 40% in 2022. Is Adobe stock a buy for 2023? I'm going to answer that question before this video is finished, so stay tuned. I'm going to look at a few metrics, so let's get started with the first one, which is Airbnb's quarterly revenue going all the way back before 2014. And what you see here is a very nice steady upward trend in Adobe's revenue growth. It's showing that customers appreciate its products and services. They're sticking with it. They're renewing their subscriptions. It's attracting new customers. Everything is working well for Adobe's top line revenue growth. The next metric I'll look at is Adobe's operating income going back for the same period in time. And this is important when I see companies that have very nice revenue growth. I like to look at its operating income because I want to see profits going up. Sometimes I see companies that have this explosive revenue growth and profits are flat and they're not even rising, and I wonder, why are they working so hard to gain this, to get this business that's not adding to their profitability? I'm skeptical of those kinds of companies, but that's not the case for Adobe here. You see operating income is rising just as nicely as revenue is. So you're seeing as revenue is growing, operating profits are also growing. Excellent sign for investors to see this exponentially growing operating profits. The next thing I like to look at is cash flow from operations. I want to see that these profits, these accounting profits, are turning into actual cash flows. And that checks out here for Adobe. Again, you're looking at that similar trend, nicely upward going back from 2014 and increasing as the years go on, as the top line increases. The next thing I'm going to look at is Adobe's total assets and total long-term debt. And I want to see, I usually don't like to see very much asset growth or long-term debt growth. I like to see revenues and profits expanding off an existing base of assets, right? Because that means they're doing better with the assets they already have in place, versus if total assets are growing, that means they're adding new assets, they're adding new production facilities, maybe new offices, maybe maybe they acquired a company. And in fact, in Adobe's case, it did make an acquisition recently, one that investors are not too happy about, right? Where Adobe paid $20 billion to acquire Figma, and Figma's only expected to add roughly 400 million of revenue to Adobe's business. So it paid 50 times sales to purchase that company. That's a very expensive price to pay for an acquisition. Investors were not happy about that. And so that's the kind of thing I don't like to see when I'm looking at assets. I don't like to see those kinds of additions to a company's balance sheet, to a company's overall asset base. And the final thing I will look at on for Adobe to determine if the stock is a buy for 2023 is its valuation. To do that, I looked at its price to earnings ratio because Adobe has consistent profitability, and I looked at its price to free cash flow because also Adobe has consistent free cash flows. And looking at these two metrics, the stock is as cheap as it's been in the last year, trading at a price to earnings of 33.5 and a price to free cash flow of 21.5. And on an absolute basis, not just looking at it relatively speaking, a price to free cash flow of 21 is pretty good for a company that is growing free cash flows the way that Adobe has been growing free cash flows, right? We saw that nice upward trend, and so you can expect free cash flows to continue increasing over the next few years, over the long term, right? Over the next 10 years. It's in a growing industry. Its market is growing. People are even more so using digital asset creation than they've ever done before, and that's what Adobe's in the business of doing. And so you can expect customer demand to continue increasing. And so it's a relatively fair price to pay, price to free cash flow. Price to earnings, You can argue that it might be a little expensive considering that Adobe's earnings has been relatively flat over the last 2 to 3 years. Management does expect nice earnings growth for fiscal year 2023, but that remains to be seen. Digesting the acquisition, the size of the Figma acquisition, it's not always an easy thing to do. There can be hiccups um, in bringing everybody on board and integrating the company. But still, given all that, management still expects earnings to grow in fiscal year 2023. Okay, so to answer the question, is Adobe's stock a buy for 2023? I'm going to say yes, Adobe stock is a buy for 2023. The company is a leader in the digital creativity space. It's got sticky recurring revenues. A lot of its customers renew the membership, and it's not trading at an expensive valuation. The stock is relatively fairly priced considering that it expects earnings to expand robustly in 2023. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.